Okay, guys, welcome to TradeWise. This is John speaking, and this is a strategy that I'm going to share with you guys. I'm going to share you guys this same strategy. We are going to just post and teach you the results of the strategy, why we entered, and everything that you need to know so that you can also start um, using the same way that you are trading with this strategy. Okay, so the strategy is a well-known strategy called the Quasimodo strategy, or in other terms, at the QML level. This is a strategy where it focuses on reversals. So it requires a market to be trending in a certain direction before changing and seeing some structures of a reversal. So let's say we want an M15 time frame. You guys can see the market has been going up, 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 right? And when it approached these levels right over here, it started giving us a scenario that is confirming Quasimodo. So what do you need to look at Quasimodo? You must first look for Quasimodo sell, right? What you must first look is that this structure, the market makes a higher high, right? After making a higher high, it must make a lower low and then retrace back up. So you got that line, made the higher high, then right after the higher high, after that move, it must make a lower low. So you can see at this area right there, it was broken by this area here was broken by this movement, right? So how so that is how you are going to mark out your chart as a sell. So where do you mark your zone that you want to sell? So you're going to put your resistance. Your resistance is going to be on the body of this candlestick right there, and then that's your resistance. Then you draw out your supply. Your supply is everything above that line where price is printed out. So price above this line, this is price that is printed out. So if you go on a lower time frame on M5, you'll be seeing that the the supply is really holding on, right? And that is how you're going to take your trade. So you wait for this market to break this structure high and then come in to break this structure low. So after it breaks the structure low, you have to wait for the market to come back up here and retest this line here. Once it retests, you just sell, and then your first target is going back here, and then your first target is that, your second target you aim from measure this distance as I'm doing, and you put it right here at the support right here. So you guys can see I can add more cells as I'm doing right now. Okay, just hit a bit of TP. Let me just adjust these trades that I put, and then I will aim again these targets right there. It's a very simple strategy, but it is very complex in terms of looking for the right pattern, and you should be patient to wait for it. So you could decide that you want to be trading this on VIX indices like Nasdaq, US30, or currencies, right? You can pick out even just 20 pairs, right? And you look for the Quasimodo on every single time frame. But I suggest from 50 minutes is the lowest you can go, and the highest you can go is maybe to daily. So you must look for the pullback of the Quasimodo. Which one is the pullback of the Quasimodo? This is the pullback of the Quasimodo. Because at the end of the day, it looks like a head and shoulder, right? This is just a rough explanation of a cell. There will be more videos coming out explaining more and more, and we'll be taking more trades using just this strategy only. We are not going to use anything else. We are not going to use indicators. We are just going to use a trend line, our support and resistance line, and our zones, which is either supply zone or a demand zone, and that's all. As easy as that, but it is not, it's simple really, but it's not easy to pick out the trades. It is not easy to just manage your money like that. You need to also be wary that you should also use your stop loss. So I usually don't use stop loss on this, but it is advisable right now if I'm when I'm teaching you guys, use your stop loss, put it above this line, because when the market breaks this line and you are selling, it will eventually just be going up. So this, when the market breaks this line, take your stop loss. It means that the market is invalidated. So the setup is wrong. But this usually is like 70 to 80% an accurate strategy. So usually your stop loss should also just be a bit, you must accommodate your spread. What do I mean by your spread? You see this red and green line, this distance, right? You must measure this distance when you're putting your stop loss, right? This distance right here. Let me just, yeah. So if you're putting your stop loss right there, so you're gonna have to put your stop loss right here, because the market can actually just come here and not actually invalidate or penetrate this line, but the spreads can widen and take out your stop, and the market can start dropping down again. So you should always give room for the market to move, right? Okay, so that is all for now, and more videos will be coming. Peace.